Hey everybody, Brian Shannon here from alphatrends.net. Today's Thursday, the 24th of March, 2016, and we have a 3-day weekend in the market. So let's take a look at what we had this 4-day week here. The S&P 500 lost just a little bit of ground here for the week, as did the Nasdaq, the Russell, the semiconductors. Biotechs actually bounced a little bit, so they showed some relative strength for a change, and oil lost some further ground, that is, gave back some of its recent gains. Let's start out by taking a look at oil, and you can see here that this downtrend line actually goes back to 2014 highs, and when we look at that downtrend line that's been broken, and the fact that we have exceeded this prior band of support, which was resistance, what we'll be looking for in oil is for this general area, let's say 36.5 to 37.5 hold. I think as long as you hold above this level, then we can consider that oil is still recovering from this larger sell-off that it's experienced. To the indexes, to the S&P 500 starting out, we broke down below that longer-term trend line from the February lows. I'm sorry, that's not the February lows. Let's start that over again. But from this level right here, right now, what we have when we look at the daily chart is we have this was our first close below a rising 10-day moving average, really since this move upward began right here this first day on February 16th. The last time we closed below that was Friday the 12th. So we've been above this rising 10-day moving average, and next up we would expect that a test of the 20-day moving average would come, and we can see that that's also a prior area of resistance right in near that 20-day moving average. So resistance broken tends to act as support. As we had observed, we do have the 5-day, 50-day moving average rising now, and because the market got rid of these days here. So, we've been open for 57 days so far this year, and let's take a look at where we are on a bigger picture, which is right at that 200-day moving average. So, we've got still a lot of mixed messages in this market. If we can hold, I think, up above probably, let's go to the 30-minute time frame. If we can hold above this level next week, then we are likely to see that this market will correct further through time. I think there's a lot of people expecting it to decline further, and it's certainly a possibility, and we have to be alert to that right now, in particular because we are below a declining 5-day moving average for the first time in this rally as well. So the direction of the 5-day moving average is declining, and that puts us in a very cautious stance here. In order for us to become more neutral on the intermediate term, we're going to need to see it get back up above this prior little band of support in here, and which has become a little bit of resistance yesterday. So we need to get it back above 204 really and close above there. If it can do that and hold on to it, then this will be a shakeout within this longer term uptrend on the daily time frame that we're seeing. But as we know, we have to be prepared for anything, especially the market this year with all the wild volatility we've seen. So the bearish scenario would be that the bearish potential would be that we kind of do something like this and then come down. So what we would want to see is we would want it to see it below what will become the 2-day volume weighted average price. This is today's VWAP. Tomorrow or Monday, basically, that would maybe look something like this. And if it was below the 1 and 2-day VWAPs, then I think you would short it here with a stop just above this level. So it's always a moving target here, the market, which is why you have to be prepared for anything and not get locked too hard into a belief, but to have a plan of action that says, if the market gets back above 204, what then do I want to do? Or if it gets trapped underneath that level, then what do I want to do? And listen to the market to tell you what that message is. Here's an important thing that we broke below that kind of makes that a little bit more important up there, and that is the volume weighted average price since the event. The event, of course, right here was the Fed meeting that the market had rallied initially off of that. And we saw that on Wednesday, and then that was yesterday. And again on Thursday, we closed below that volume weighted average price, and that's also at the location of this prior support and the declining 5-day moving average. So that kind of tells us the psychology since the Federal Reserve, we've had net sellers of stocks. So keep that in mind. And then we'll want to keep an eye on what are other potential levels for this market to decline to. So we could say, well, let's take a look, for instance, at the volume weighted average price from this low. You can see how it found support here and there. And then how about from either of these two lows? Now, we're below the volume weighted average price, or I'm sorry, we're right at it. So I think that the next potential level would be down near that 201 that kind of confirms what we were looking at on the bigger picture. So going into next week, I think what's most likely to occur would be a rally up towards this level and then a look for a failure and then move down towards 201. I would only trade that if price action tells me that that's the proper thing to do. If the market instead rallies up through this level, I'm not going to say, hey, that's resistance, I'm going to short. I'm going to wait for it to decline away from that level and know where I can put my stop. Because if the market does something like this instead, then I will want to participate on the long side, and we have to have that plan of action that's looking for anything. We don't have crystal balls. We're not trying to predict. We're trying to anticipate what the potential scenarios are, determine if it's a low risk, high probability trade for the time frame that we personally engage the market, and then decide if it makes sense to get involved. And the Nasdaq, this market came up to its 200-day moving average and closed below it. But again, we've got some pretty impressive action here still, in that the market has been making a pattern here, a very distinct pattern of higher highs and higher lows in these little consolidations where prior resistance acts as support on the way up. So if in the Nasdaq, for instance, we see a break of this 106-ish level, which I would think would be a pretty likely area where demand is found, because it's been prior resistance over here and then support. So we have this market, though, right now. When we take a look at it, let's look at a 15-minute time frame, and we can take a look again. Here's the, since the Fed, we're just below that volume weighted average price, and we're below this 5-day moving average. So this market appears as though it's a little bit more ripe and more ready to decline here. So I would be looking for this market to maybe make a decline and do something like this, and then want to get short on the way down with a stop just above whatever the recent most recent relevant lower high is for that time frame. If instead it did something like this and then came up through that level, then I would consider maybe it's time for me to get more long exposure on, because we have a rising 10, 20, and 50-day moving average, and perhaps it's still headed for the 110-ish level. The fact is, the intermediate term trend has been very kind to the longs here, for the past several, past 2 months. And now, what's the trend line that matters most? Well, the essence of trend is best represented, I think, by a trend line that looks like this. So if we see that, rally failure, and then it breaks the trend line as well, I think that will add to the significance of a little bit more of a breakdown here. So very cautious still going into next week. The Russell 2000, you can see, has come down to this band of support in here. And looking at a 30-minute time frame, this is the bigger band of support. Now, if we, what I would see is if we start heading up back towards this and then start to decline, I would want to short here with a stop above this level, and then see how it behaves in here, and maybe cover partial, but I wouldn't look to get long or cover the whole thing. It would be up to the market, because it might just slice through that level, but it's potential support in that scenario. We can take a look here as well at the volume weighted average price since the event, and we'll do that on the 15-minute chart, because that's just a little bit, we can get a little more clarity. You can see that's above that level as well, and that, the volume weighted average price let's say of this range since we first got in here. We're below that as well. So that tells us there's the greater likelihood for resistance up ahead, and that this market will either need to consolidate through time and maybe drift down towards the low end of this band and then bounce again, or are we going to pull back deeper towards that 50-day moving average? Again, no crystal ball. Let's be prepared for scenarios though. The semiconductors pulled back a little bit here this week, and for a 30-minute time frame, again, what is the essence of trend? I think you could say that this trend line that had been touched a couple times, broke this week. Then that put us on a little bit of defensive as it broke down this first level of support, and it's below the 5-day moving average. And we can take a look at the volume weighted average price since the Fed in here as well. So this becomes a likely band of resistance that we'll want to say, okay, if it can push up through that level and hold above that level, then it seems to have been a shakeout in this daily uptrend. But if instead we find resistance, if we find resistance up in there, and then it starts to back away from these levels and is below, maintains below a 1, a 2, a 5-day volume weighted average price, then we would want to look to be trading on the short side, but not until that happens. Biotechs, as we said, showed a little bit of relative strength to the rest of the market this week. It's still a giant mess here, and we can make the argument, as we've been saying, that it's been in this really, bigger, there's this bigger box in here doing a whole bunch of back and forth nothing. And when we look at a 30-minute time frame, let's just erase that. You can see that we've got a 5-day moving average, which is rising. The volume weighted average price from last week's low, we did manage to close above. So last week we spoke about the possibility that this is a failed breakdown that might lead to a faster move higher. And so far, we don't have a fast move higher, but we are holding above this breakdown level. So as long as we hold above that, I think we want to be a little bit more neutral in the intermediate term. I think breaking below 251-ish would be dangerous to this market once again. And we've got this, which was prior support, has shown resistance recently as well. Well, what else do you see here? I see that you could call this a right shoulder, a left shoulder, a head, and a right shoulder. So perhaps we're setting up an inverted head and shoulders pattern. If that's the case, the trigger officially comes up here. But it's not just, if it gaps up to that level, would you want to buy there Monday morning? I certainly wouldn't. I would rather see it run up towards that level, pull back, create a higher low, and then buy on strength with a stop underneath the higher low. But the more times resistance is tested, the more likely it is to fail to hold it back. And if that were to trigger, we could come up with a price target, which we'll do conservatively and call this 244 up to 264, let's just call it, so 20 points. That would tell us that it would give us an upside objective of 284. Is 284 reasonable based on this chart? So here's 284. Seems reasonable-ish, but again, we still have a declining 50-day moving average, so it's not a high confidence trade, but it's something that's possibly setting up, and we want to know what is possible and what's most likely, and then it's up to you to determine, okay, I'm comfortable with the risks, now I'm going to put my money to the market. SQ I had mentioned over the weekend and Monday morning as far as a potential short squeeze candidate, because we've got 10 million shares short this stock, and what I had outlined in it was that I wanted to buy it on Monday above this level. It did that, and at Alpha Trends we got stopped out as it got below the volume weighted average price from that move, and which was also below Wednesday's low. So right now you can see it's finding resistance there. So I'm happy to have locked in profits in there for now, and perhaps that sets up again. We also had a great trade in NPTN, and again, it's about getting out while you can. That's NPT. What I said was NPTN, and we got involved in here at 1220, and we got stopped out right there before this big decline, and we can see it over and over again. And then we got short LNG right in here at 35 and a dime, and covered partial of it. Anyways, these are things that I sometimes put on Twitter. So if you're just following me on YouTube, go ahead and take a look at Twitter or Stock Twits. And everybody, hope you have a good long weekend. I will talk to you next week. Thanks for tuning in.